How serious is this investigation? The Journal makes it sound like it's quite broad. And what could the consequences be?
I don't know how serious it is, but obviously it's ongoing. And I think what they're looking at is to see to it that any derivatives transactions are done on an exchange, not over the counter as before Dodd-Frank. And if you're asking me for my opinion about this as an advisor to a number of private companies, I don't think it generally is a healthy thing to be selling unlisted securities privately in this fashion. I think in some cases it's important, but as a general notion, I'd rather see that money going to the company rather than to see valuations that are imprecise at best for employees to sell that stock on the second market.
Bill, this is your business. Have you been contacted by the SEC, and how could this affect your business?
So we haven't been contacted by the SEC, and our business is predicated purely on working directly with the companies. So we don't run or condone an over-the-counter market or broker transactions between individuals and current or ex-employees. Our business is working directly with the company to run structured, organized liquidity events where they control who gets to participate, how often, at what price, and importantly, the disclosure that goes into those transactions.
So, as I understand it, there was a big market for pre-IPO shares ahead of the Facebook IPO. It sort of dried up, but over the last couple of years, the market has rebounded and exploded again. I mean, what companies are we talking about here? How easy is it to get shares in Uber and Pinterest and Airbnb, despite the fact that companies prohibit this?
So what's happened is actually as a result of what happened in the early days of 2010 and 2012, where Facebook was trading very actively on the private market, companies watched that market take place and really didn't want the same scenario to play out in their own companies. So a lot of the companies that we're talking about today worked at those early companies, and when they set up and founded a lot of the companies you're mentioning, they put in place what are called capital T restrictions on transfer, meaning that they expressly prohibit the transfer of ownership of the underlying equity, and that includes encumbering or placing a lien on that stock so that no secondary activity can take place outside of their control.
So quickly, Arthur, how do you see this playing out? What sort of penalties could we see? What sort of crackdown could we see?
I don't think this deals with penalties or crackdown. It's more a symbol of an overheated market where people are anxious to buy those shares before they go public and pop to a premium. I don't think that's healthy for the industry, and I think that as a shareholder, I wouldn't want that to happen.
Okay.
I'd want funds that come to the company to be used for the company.